Good morning, ladies and gentlemen. Welcome to the EPRA JLL sBPR webinar. My name is Hassan Sabir. I'm the Finance and Sustainability Director at EPRA, and I'm joined today with Tom Branczik, who is the ESG lead at JLL. So today we'll be talking about the EPRA sBPR standard and its critical importance for the listed real estate sector. So before we jump into the specifics of the standard, I would like to give a bit of background to EPRA for those of the attendees who don't know much about us. So EPRA's mission is to promote, develop, and represent the European listed real estate sector. We are a membership-based organization. As you can see on the slide on your screens right now, the majority of our members are property companies and REITs, which make up 63% of our membership. We also have investors who are members of EPRA, and they make up 22% of our membership. The rest of the membership is composed of academics, consultants, etc. In total, we have 273 members. So the association is based primarily on 5 main business lines. So first one being research and indexes. We also have an investor outreach department. We also work on financial reporting and accounting, and sustainability is part of that. We also operate on the public affairs side, where we lobby on legislation, etc., to benefit the listed real estate sector. And lastly but not least, we also have a very strong events and networking offering, which we conduct for the benefit of our members. So JLL and EPRA go back quite a long time. When the sBPRs were first introduced in 2011, JLL was there with EPRA in defining the metrics, and of course also helping in getting the traction in the market. So JLL has been involved over the years, so right from the first edition to the current 3rd edition of the sBPR guidelines. We also use JLL plus other consultants on our advisory panel, which is a panel of experts providing advice to companies or EPRA members who have challenges in using EPRA sBPRs. We also introduced a Diversity and Inclusion Award last year, and we also use JLL for that. So that was a brief description on who EPRA is. So hopefully all of you have a good idea of what our organization stands for. We'll now jump into the sBPR reporting standard and the relevance for the listed real estate sector. So I think the most important question that we seek to address today is why is it important for listed commercial real estate to manage ESG impacts? So we've identified 7 key points. Firstly, being reputation. I think reputation for any listed company is critical, and so much for the real estate side. Corporate reputation is important for tenants, customers, and clients. We also see that compliance with regulatory requirements is something that's quite important. The European Commission had recently introduced a non-financial reporting directive. So for companies of a certain size, it's mandatory to report under such legislations. We also see, as of the last few years, increased demand from investors for ESG reporting. And this is mostly for the investors to manage and mitigate risks on their end. Of course, it's also important for the companies to manage the risk themselves. So we feel that ESG is quite critical for that function as well. ESG, in our review, is not just about risk management. We also see there is value proposition to ESG initiatives and impacts. And we see that in operations. So improved performance based on energy savings or other cost savings related to ESG initiatives. And of course, we also see that there's a competitive advantage based on being the leader in ESG disclosure. So if a company is looking at applying LEED, BREEAM, or well-certified buildings to their assets, this increases the competitive advantage in the market. Moving on to the next slide, I think this is important to differentiate all the ESG tools and frameworks that are out there in the market, or at least which we feel is relevant to the listed real estate side. So we have on the top left side the general reporting frameworks, so the likes of GRI, TCFD, integrated reporting, etc. Now these are very good frameworks, and they do a very good job in getting companies or helping companies to report their ESG performance and commitments, but they're for all industries. So it's not specific to real estate, and more especially not specific to the listed real estate side. Then on the bottom left side, we have industry-specific standards. Now these standards are focused towards the real estate side. So for example, the one that INREV advises on is for the non-listed side, and that's where we at EPRA feel that the EPRA sBPRs is specifically tailored for the listed real estate side. Both these, the top left side and the bottom left side standards feed into public disclosure. And going to the right side of the slide, we also identify how global commitments and other initiatives are part of this whole equation. So when companies disclose publicly using, for example, the EPRA sBPR standard, they can then align to the global commitments and other initiatives such as the SDGs or the COP21 commitments. We also see that in the market there is a bit of confusion on how the benchmarking and rating entities operate. So they provide valuable service, we feel. However, we think that this is quite different to the reporting standards. So for example, GRESB, CDP, Sustainalytics, MSCI, etc. They provide important information to the market, but they need the public disclosure. And we are quite aware of the fact that quite a few of those benchmarking and rating agencies use public disclosed information. So this is the whole ecosystem we wanted to kind of display to the audience. So there's a better understanding where EPRA sBPR is placed in this ecosystem. So as I was mentioning, the EPRA sBPR standards were introduced back in 2011. The first version only included environmental impact indicators and was largely based on the GRI G3 standard. We updated the sBPR guidelines in 2014, and this was aligned with the GRI G4 standard, and also we wanted to provide further clarity and also support in reporting for the companies. And the last and latest edition was update was in 2017, and this included the addition of social and corporate governance impact indicators. Again, this is loosely based on the latest GRI standards, but also aligned with the EU non-financial reporting directive. So as you can see, this is an evolving framework. It's not a static document, as in how global initiatives come through on ESG reporting. We would keep on updating it to reflect those changes. So for example, just to mention, the International Accounting Standards Board is looking into providing guidance on ESG reporting via the management commentary part. So it's just initial discussions right now, but maybe in a few years' time, the ISB might provide more guidance on how ESG should be reported via their standards. So the idea is just to clarify that this is an evolving framework, and be updated as and how needed to reflect changes in the market reporting side. So on this slide, since 2011, EPRA has been providing guidance via the sBPR framework. These best practice recommendations are industry specific and provide a consistent way to report sustainability performance of the listed commercial real estate companies in Europe. It also provides increased comparability and clarity of disclosure among peers, and provides public and accountable disclosure that allows all stakeholders to access identical ESG information. I think the last part is quite important for us. We feel that any data that's used by investors or used by analysts should be accountable, and there should be public disclosure angle to it. So this is one of the core bases that we follow in promoting at the EPRA sBPR standard. On this slide, we wanted to share with you a snapshot of what these KPIs are. So the current scope includes covers only portfolio and corporate disclosure. It covers property companies' operations only, and provides guidance on reporting principles, which we call overarching recommendations, and of course a set of metrics which cover environmental, social, and corporate governance impact categories. On the environmental side, we have KPIs which cover energy, waste, water, greenhouse gas emissions, and green certifications. On the social side, which were introduced in 2017, we cover diversity, employees, health and safety, and community. And also in the corporate governance part, we use KPIs which cover the corporate governance angles. So in total, there's 28 performance measures. And just to mention on the environmental side, there's this distinction between like-for-like, absolute, and intensity measures. So hopefully this provides a good idea about what the EPRA sBPR standards are. You can access the guidelines via EPRA's website. It's a simple address is epra.com/sustainability/sustainability reporting/guidelines. You can download them and you can review them to understand what the guidelines stand for. On this slide, we wanted to provide the audience with how the sBPR standards have been taken up by the market. So as of 2019, 70 European listed real estate companies reported to a minimum threshold of the EPRA sBPR guidelines. These 70 companies represent 252 billion in market cap. Between them, they own 6,400 assets, and the geographic coverage is 13 European companies. On the right hand of the slide, we have broken down the reporting companies by market cap. So 33% of the reporting companies had a market cap of less than 1 billion euros. 47% had a market cap between 1 to 5 billion euros, and 20% had a market cap of more than 5 billion euros. I think what's crucial here is that market cap is not representative of reporting results. So if you are a mid-size or a small cap company, provided your intent on reporting along a specific framework, hopefully sBPRs, then it shouldn't be an issue if you're a small cap or a mid cap, based on this slide, as you can see. One important part about all this, the data that the companies are disclosing, where can this be accessed? So first and foremost, this is publicly available data, so it can be accessed through the annual reports. So of the 70 companies that I mentioned on the previous slide, 49% disclose the EPRA sBPR data via their annual reports. 40% of those companies reported via a separate CSR report, and 11% issue a standalone document covering the sBPR data set. We have also managed to construct an EPRA sBPR database last year. This was launched in September 2019, and it is open to access to investors, analysts, academics, and property companies. And the main rationale behind that was that for anybody interested in the EPRA sBPR data set, they could access one portal and get access to all the data set instead of going through websites of 70 different companies and then downloading downloading the data and then of course compiling it on one side. We are also aware that some financial platforms and data providers also pick up the sBPR data set and incorporate that in their platforms. If any of the attendees is interested more on the sBPR data set, you could access it via epra.com/sustainability/sBPR database. It's a simple registration process. You don't need to be a member. It's free, and you can download or access the data set over there. Connected to the sBPR guidelines, we at EPRA also conduct an sBPR assessment every year. So the idea behind that assessment is that we provide a high-level filter on companies that achieve the minimum level of disclosure expected of them. So this assessment is done every year. It's focused on just EPRA members. As of, for example, for 2020, they have to be EPRA members by 31st March. And the information is then accessed through annual report, sustainability report, or separate EPRA sBPR tables, which are published by 30th June for any given year, 2020, on the company's website. We conduct the assessment together with our partner, JLL, from July to mid-August, and the results are announced every year at the EPRA conference in September. We just don't stop there. We publish a report which highlights the performance of all the companies that are reported under the sBPR guidelines. And then we also provide a company-specific report, feedback report, which provides detailed feedback to each company on how they perform on sBPR reporting. So it's a full interactive process. We just not provide the framework for the companies to report on. We also provide a high-level assessment and also feedback to the companies on how they have performed on their sBPR reporting. These reports are also accessible via the EPRA website. I think if you just log into epra.com/sustainability and click on sustainability reporting and further than sBPR awards, you should be able to access these two reports from there. I think one of the main questions that we receive from property companies when we talk to them about sBPR guidelines is how are investors using EPRA sBPR assessment and disclosure. So we've had reasonable interaction with institutional investors, sell-side analysts, etc., and we put down our findings on this slide. So for some of the large institutional investors, they use the sBPR awards as a first-level filtration exercise. So if a company does not have an award, they will already discard it if they are focused on ESG credentials when they are trying to pick a company to assess and analyze. We also know of a few investors who plug in the ESG data into their proprietary ESG models, and then they do the analysis based on that. Analysis of course, ranges from harmonized like-for-like changes to integrating data into their ESG risk models. And we also have observed a trend of very few investors who've started considering using ESG data for valuation purposes. And this is, of course, on our one-on-one interaction and meetings with various investors. We've also noticed that sell-side analysts have started covering commercial real estate, and and have started issuing ESG disclosure reports on equities under the coverage. We also noticed that EPRA sBPR data figures are used as the main data source for this commercial real estate sector coverage. Analysts have provided ESG-based recommendations, of course, and that just feeds into the general recommendations on how analysts report on equities. But we see that ESG has started to figure majorly in the coverage. And I think, of course, the traditional usage of ESG data is by in-house risk teams. Some of the investors we've visited have centralized risk teams which use a mix of publicly available data with third-party analysis to provide recommendation to their portfolio managers. And again, this all varies from investor to investor, the strategy, the sizes of the teams, etc. But what is important to notice here is that the sBPR data in the listed real estate side in Europe is being directly utilized. I think on this slide, we also wanted to signify that it's just not the direct usage of the ESG data, but it's also the indirect use by ESG rating and benchmarks. So for a lot of the companies which probably would have dialed in today, they're reporting to GRESB. GRESB has the public disclosure module, and in that, they mention EPRA sBPR data set as compatible for this public disclosure module. We also have an understanding that Sustainalytics, MSCI, ESG ratings, etc., do use public data for their ratings, analysis, etc. And as sBPR is the predominant data source for the listed real estate side in Europe, this is how we see the data flowing into various ESG rating and benchmark initiatives. So I hope you found that high-level introduction to the sBPRs useful. I will now hand over to Tom Branczik from JLL, who will do a bit more detailed analysis on that. Tom, over to you.
Thank you very much, Hassan, and good morning to everybody. So what I wanted to do was just take a little bit of a deeper dive into the sBPR and building on the experience which we've gained over the years to provide some sort of practical advice on the nuts and bolts of applying the sBPR. So you can, as Hassan mentioned, we've been working with EPRA for 9 years now, sort of helping to develop the sBPR and also helping to conduct the annual assessment. And during those annual assessments, our team looks at approximately 140 reports, sustainability reports, and annual reports. And we also support a number of clients with their EPRA sBPR reporting as well. And I thought I would sort of use that knowledge we've gained and the input we've had to kind of draw out really sort of what we think are the top 5 tips and recommendations that can be used to help members who are either about to start their reporting, but also those who have been reporting for a number of years and want to up their performance. Now, I appreciate we've probably got an audience of people who are familiar with the sBPR, people who aren't so familiar with them attending. And we will have a Q&A session at the end of these slides, and you can send us your questions using the chat function. And we'll try and get through as many as possible. If we can't, then we just sort of welcome you to sort of contact us directly afterwards with any questions, and we can sort of follow those up with you. So the following sort of recommendations I'm going to go through, they are based on the many conversations we've had with clients. And we've tried to tackle some of the most common misconceptions that members have about applying the sBPR, but also looking at some of the quick wins and the more impactful changes members can make to increase their alignment with the sBPR. So as a first step, I really just wanted to emphasize the point which Hassan made earlier about the distinction in the sBPR between what we call the performance measures, and these are the data points, so where you report, for example, your electricity consumption, and the overarching recommendations, which really provide the context to those. Now, the assessment methodology is available to download, and it explains how both contribute to the overall assessment, and therefore how much you align with those can influence the level of attainment you have with the BPR, with the sBPR. But in essence, the performance measures contribute about 50% of the overall score, with the overarching recommendations contributing to the remaining 50%. So it's essential that you apply both when you start off your reporting. And now, while there are 28 performance measures covering issues such as energy consumption, water, waste, building certifications, employee diversity, etc., there are 12 overarching recommendations. And as I mentioned, their role is really to provide the context to the performance measures. So two of these performance measures are what we describe as foundational, and that's in the sense that they establish the scope of the reporting you want to apply. Now, these foundational measures are organizational boundaries, which helps you to determine what assets to include in your EPRA reporting. And also the distinction we make between reporting your portfolio impacts and also the impacts from your own offices, where often you might be a tenant rather than a landlord. Now, the remaining 10 provide context to those performance measures. Now, these remaining 10 are all actually scored separately. So the foundational overarching recommendations are scored separately, and they contribute about 7.5% of the overall score. And the contextual overarching recommendations, these are scored individually for each performance measure. So to get those points, for example, you would report energy consumption, but then you must also provide information on that data relating to the coverage, so how many properties that relates to, whether you have any, when you report any estimations, is the data all confirmed, or have you extrapolated data based on an incomplete data set for the year, whether your data is being assured by a third party, whether the data you report relates to landlord consumption or tenant consumption, whether you need to apply any segmental analysis to the data. So, for example, if you have a portfolio comprising office assets, retail assets, and residential units, we would expect to see the energy consumption reported separately for those different asset types because they all have different energy footprints. And also, we would expect to see a narrative on your performance. And I'll get to some of these later on. But essentially, they are a set of complementary tools when they support each other and improve the overall transparency of the performance. And it's something to bear in mind when you're starting the process. So when you do start out, the first foundational overarching recommendation I mentioned was organizational boundaries. Now, these generally refer to the assets that you want to include in your data set. Now, there's a number of ways you can do this, and EPRA recommends you follow the greenhouse gas emissions protocol, which identifies organizational boundaries based on your operational control, your financial control, or the equity share. Either of these definitions can be used, but we found that operational control is the most common. And once you've decided this, you can identify the properties that should be in and out of the reporting scope. And as a goal, you should aim to include all the properties in the organizational boundary. That's for the absolute performance measures. And that includes all properties, whether they're fully or partially owned for the reporting year, as well as any developments or refurbishments which are going on. For the like-for-like performance measures, this should include all properties that have remained in continuous use unchanged for over 2 reporting cycles. While we recommend that you include all properties in the organizational boundaries, there is no minimum threshold. And if you can't do this, for example, you don't have a complete data set, any exemptions must be disclosed. And this is, again, where the overarching recommendations come in. In this case, you'd use the coverage recommendation to disclose what properties have been excluded. So, for example, you might look at your operational control of your portfolio, and you might have 100 assets within that boundary. But if you're only able to collect data for 75 of those assets, you would disclose the coverage as 75%. The third tip we have is really around reporting performance measures that are not applicable. So when the assessment starts, all members are assessed against all the different performance measures and overarching recommendations. However, we do recognise that given different asset classes, lease arrangements, or utility supplies, some may not be applicable or material. Performance measures can therefore be assessed as not applicable if there's evidence to support this claim. And by marking a performance measure or overarching recommendation as not applicable or not material, it's removed from the assessment and it will not negatively affect the final scores awarded. So just some example of how this might apply in practice. You might look at your portfolio and you don't have any assets that are supplied by district heating and cooling. So in this respect, district heating and cooling performance measures are not applicable. Another example is the reporting entity might be an investment trust and therefore it has no direct employees. Instead, these are employed by the parent company. Now, these employees would fall outside of the organizational boundaries of the investment trust. And so you could either mark these as not applicable, or you could extend the organizational boundaries to include the employees of the parent company if you so wish. Another example is you might have all your asset class. Your asset portfolio might be the same asset class and it might be in the same geographic zone. So the overarching recommendation about providing an analysis across different segments is not applicable. You can also report a performance measure as not material if, for example, it's not relevant to your portfolio. An example of this might be you have a portfolio of out-of-town logistics warehouses and there might not be any immediate community to engage with. You could have therefore marked community engagement as not material. But what I want to stress about this is in both cases, you need to provide a valid reason why a performance measure or overarching recommendation is either not applicable or not material. For not applicable, we'd expect to see a reason why this is the case. So for example, a statement that district heating and cooling is not procured. And if you want to suggest that something is not material, we would expect to see proof of this claim. And the most common form to do this is through a materiality assessment. And therefore, we would recommend that any member thinking about starting off their EPRA reporting conducts a materiality assessment and includes the EPRA sBPR topics in that assessment. The fourth recommendation we wanted to make really was about providing a narrative to the numbers which are being reported. And we strongly recommend that members do this for each performance measure, and it does constitute an element of the scoring. But as well as being a scored element, it's actually really a useful opportunity to communicate to readers of the report what the numbers you're reporting actually mean, to communicate the trends behind those numbers. And in the case of some of the social performance measures, which require more qualitative response, it's an opportunity to say how you've interpreted them given the specific circumstances of your portfolio. And when we look at the narrative, as a minimum, we're looking for a description of the absolute performance and also the trend in your like-for-like performance. So for example, this narrative could be used to explain whether a drop in energy consumption is due to weather-related events, or is it due to an improvement in energy efficiency? Or is there an increase in the new hire rate of your employees due to an expansion of the business? This narrative should be applied to all the performance measures. And it is okay to link to other publications to provide this information, such as the annual report for the governance performance measures. But when you do this, we strongly recommend that you ensure the narrative is clearly signposted through page references, and the information you're directing readers to actually relates to the relative performance measure. And the final recommendation we had, which again is a number of benefits for members here, is really thinking about the way the data is presented. Now, there's no prescribed way to present the sBPR, but we strongly recommend that members think about using the table format similar to that which is at the back of the EPRA sBPR guidance document, which you can download from the website. Now, this is a table which addresses how to disclose performance measures, but also overarching recommendations. So by using it, it really helps, it enables the assessment team to reliably find the information that is needed to avoid any confusion about what data sets or methodology they should be addressing. It also enables members to systematically ensure that all the performance measures and all the overarching recommendations have been applied. And thirdly, it enables the data to be accurately captured for use in the sBPR database. The table should be prefaced by an explanation about how the company has applied the overarching recommendations. For example, using it as an opportunity to explain what method you have taken for defining the organizational boundaries. One trend we've observed in recent years is that more and more members are producing a separate EPRA sBPR report or an annex to their sustainability or annual report. And I've included here a screen grab of the Great Portland Estate Sustainability Performance Data Report, which is a really good example of the kind of document I'm highlighting here. Now, one advantage of producing a separate EPRA report, and it doesn't have to be a long document, is that it can be published later in the year, before the end of June, to meet the assessment deadline. Now, for companies who, with a year-end reporting period, who usually publish their reports in March or April, publishing a later report ensures that there is additional time to get the data assured or fill any data gaps or estimations if the normal reporting cycle is too soon to collect all the data, if it's provided by invoices or meter readings. This enables that extra time to be data to be collected, assessed, and assured. So those are our top 5 recommendations. I hope that they are useful, and I will welcome any sort of questions or clarifications you might have about those. And now we'll open it up to the Q&A. And we've had some questions in already. So I'll start with one which I've got here. Somebody said that the company's got a significant stake in shopping centres, and tenants are responsible for almost all the spaces within the buildings. And therefore, the tenants decide how much they consume in terms of water and energy. And how do you communicate those types of assets? And is there a requirement for tenants to share with us their consumption data? In terms of a shopping centre portfolio, what we recommend is that as a minimum, you report the landlord-controlled energy consumption. So this is either landlord-controlled or landlord-invoiced energy consumption. That's the minimum requirement for EPRA. It does encourage you to collect tenant data as well, but that's an aspirational element, and it's not a scored element. And if there's a significant stake in shopping centres, and there's also other assets in the portfolio, then you would need to apply the segmental analysis overarching recommendation, which separates the shopping centres from any other asset class you might have. Hassan, have you got any?
Yes, so thank you, Tom. I see a question has popped up related to investors. So the question says, you touched upon investors' use of ESG data and ratings. Can you elaborate a bit more on the investors' approach to ESG you see in the sector? Certainly. So this is quite an interesting question. And just to give a bit of context, back in 2011, 2012, when the sBPR database, sBPR guidelines were introduced, and there was not as much interest in the ESG world as we see today. So the investment community is certainly very interested. However, what we see is an evolutionary trend. Investors have traditionally relied more so, as we see, on the benchmarking and analytics providers to provide them easily accessible ratings or gradings to make investment decision. So we feel this is part of the evolution. We feel that eventually the investors would, and I'm talking about generally all investors, would develop the sophistication to use data, ESG data, as they use financial data. So this is the interesting evolution that we are seeing in the market, and I think we as EPRA would like to support that, because we feel that if the financial data, which is being used by investors, analysts, etc., is all in the public domain, and no investor or analyst will pick up data which is not in the public domain, so it should be the case with ESG data. But I think this will take a bit of time, and again, this is an evolving subject matter, so it's quite interesting times for us.
I have a question. Can you hear me?
Yes.
Hi, this is Debbie calling from Woods Bagot Architects in London. I noticed, I think you've said that the last EPRA sBPR report was created in 2017. I'm just wondering if there's a move to having another iteration or another version of that this or next year on the back of new understandings and new data and new benchmarks coming out in relation to the climate emergency.
Mm-hmm. That's
quite a lot's happened in the last 18 months on that front. So
yeah, no, that's a good question, and it's particularly pertinent because we do have a program of work starting in Q1 this year, which to actually provide an annex to the sBPR about how they can be used to align with reporting against the TCFD. Mm-hmm. Starting off with the performance metrics included in EPRA. So something we're very aware of. We are responding to that, particularly with the TCFD. In terms of the longer term, obviously there's been changes to the GRI standards, and not in every case are the changes to the GRI standards relevant to real estate. So we're not automatically going to update it whenever GRI changes there. But if we do think there's a case where a change is relevant, meaningful, then that's something which is looked at on a regular basis.
Okay, thank you.
Does that answer your question?
Yes. Yep.
Okay, great. Right, I've had another question here around materiality. The sBPR guidelines are quite flexible regarding the materiality assessment, and the question is whether there's any methodology we would recommend in particular, such as the GRI. Materiality is always a thorny issue, I think, in the sense that there are a number of methodologies out there. They all look at slightly different things. So the GRI is very much sort of focused on impacts in relation to stakeholders and the organizational's impact on topics. There's a slightly different definition applied by the Integrated Reporting Framework. We don't recommend a particular assessment. I do like the GRI one in the sense that it's actually quite thorough, and following that format provides a good, robust process. I think that, and we would encourage you to follow a similarly robust process. But at the end of the day, I think materiality does come down to a value judgment at some point. When the assessment is being done, we're not necessarily looking at the quality of the underlying methodology used, but the outcomes of that. And I would sort of hope a really interested investor would sort of then engage you further on the quality of the materiality assessment. But what we're looking for is, if you argue that a performance measure is not material, we're looking for that proof point. Have you actually done that assessment? Can you point to a process by which you have reached that conclusion, rather than just sort of coming out just in the report saying it's not material, but we don't have a process to prove why? I hope that answers that question.
So we're just looking through the chat option in case more questions have come through.
Okay, there's another question here about the difference between the EPRA sBPR reporting and the GRES submission, and the benefits of reporting according to sBPR or GRES, I think. So I think the key difference is the distinction between landlord obtained utilities consumption and tenant contained utilities consumption. So the key focus for EPRA is on landlord obtained consumption and landlord consumption, which is then invoiced to tenants. Now, there isn't a requirement to disclose tenant obtained data, but we do encourage it. And I think that's the way the market is going, particularly influenced by GRES. And in GRES, there is, I think that, well, I know that the focus is very much on providing tenant obtained data. And if you look at the way the data sets are scored on GRES, I think about sort of 60% is allocated to tenant data. So unless you are able to collect that tenant data, there's a limit to how well you can perform in GRES, whereas it's not so relevant to EPRA. And I think the other distinction is there isn't as a performance scored element in GRES, in the sense that if you've been able to drive down your like-for-like performance measures, you get extra points for that. Whereas EPRA is much more focused on transparency, much more focused about providing a consistent framework against which publicly listed property companies can be assessed on an equal basis using the same reporting framework. So for me, those are the two distinctions.
Yeah, and if I was to add to that, Tom, I think, of course, GRES provides a score, which is used by various stakeholders, whereas with EPRA, we don't provide a score as such. We just do an assessment on the quality of reporting. We don't say that one company is better than the other. I think that's for the stakeholders to make up their mind on. So yeah, I just wanted to add that to the equation.
Okay, I've just had another question come in, which is assuming that multi-usage properties do not have consumption split to usage, is it possible to report data for total properties, or does it have to be split per usage? If you can disclose, if you have a multi-usage property, so I'm presuming that this would be a property which has both residential units and office rented space in it. So you can in the segmental analysis, you can disclose this as a mixed use asset, and then you would just disclose the data for which you have the landlord controlled data for that, and you might be able to report it for common areas only, or you might just be able to collect it for shared services. But you wouldn't have to split, you wouldn't have to provide a segmental analysis for different usages in the same property if you can't do that. But we would expect us to see an explanation about that in the overarching recommendations, so we can understand the data and how it's being collected. Does anybody else have any other questions? Okay, we've got just one extra question here, just regarding how we clarify sort of Scope 1, Scope 2, and Scope 3 emissions and what they should typically include. So EPRA uses the greenhouse gas emissions protocol as the basis for calculating greenhouse gas emissions. So, but in thinking about how we report it in the sBPR, so electricity usage would typically relate to Scope 2, and then fuels, if those are combusted on site, would typically relate to Scope 1 emissions. There are exceptions to that. So, for example, we sort of came across one report where on-site boilers are actually managed by a third party, so they're not actually the landlord's energy which is being produced. In that case, they're reported under Scope 2. But generally, if you follow the Greenhouse Gas Emissions Protocol, that defines how Scopes 1, 2, and 3 should be included. But just to emphasize one point is Scope 3 emissions are not actually part of the assessment. That doesn't mean you don't have to report them, and we would encourage you to that, but they're not actually a scored element. So you can include them, and the more transparency, the better, but it's not a scored element.
So if we're just mindful of the time, and in case any of the attendees has any further questions, we highly encourage you to get in touch with us. So our contact email address is sustainability@epra.com. So if you have any questions on the sBPR, and on the framework itself, how to implement it, how to access the database, or any other related questions, please feel free to get in touch. We are there to support the industry, and we'll be happy to help in whatever way we can. So thank you everyone for joining. We hope you found the webinar of interest and it helped you understand the sBPR standard in a bit more detail. And as I mentioned, please feel free to get in touch in case you have any questions, and have a great day.
Yeah. And just one point, a recording of this and the PowerPoint will be distributed amongst participants as well, should you have missed any of this. Thank you very much.
Thank you very much.